For you to properly understand the concept of resistance and support, you must also understand the psychology behind support and resistance trading. Because if you do that, then it means 50 to 60% of the puzzle have been solved. And this is going to make you be in the right direction of the market most of the time. So understanding the psychology of resistance and support is very important, and that is what I'll be discussing in this very video. What really make price to move upward and what really make price to come all the way to the downside. All of this and more in-depth analysis about support and resistance in this very video. Watch this video all the way to the very end. Consider supporting this channel by leaving a like for this video, subscribe right now, and turn the bell notification for more Forex videos like this one. Also check the channel for other Forex content. If you come to the chart right here, I want to use a simple analogy to explain the psychology behind trading support and resistance and what you need to understand concerning this very psychological standpoint. From this very analogy, let's say, for example, you want to buy iPhone 15, okay, and iPhone 15 is selling for $1,000. Let's say, for example, and you don't have the capacity to buy at $1,000, or you feel if the price come back down a little bit, you will have the intention to buy. Already, the intention is already there, but you really want price to come all the way to the downside. Let's say for a $1,000, you don't want to buy at that price because maybe it is too high for you or you don't have the money at that time. So if price come back down from 1,000 to 800 and you think price is still going to move upward, price move upward a little bit and then come back down again to 500. Maybe at this point, you can decide to buy that iPhone 15 because you believe this very price of $500 is a nice deal for you since the price have moved all the way from $1,000 all the way to $500, which is a better price. Number one, is cheap. Number two, then it will make you buy, and then when price move all the way to the upside, you will sell at a better price. That is exact same thing that happens in the market. If a market, for example, has moved all the way to the downside, the market move down, retrace, move down, retrace, move down, retrace, move down. There are people in the market that are looking for certain psychological level, which are support and resistance. And when the market moves this much, they want to buy at certain points so that when the market begins to move upward, they will be in profit. So if the price have come all the way down to $500, and a lot of people will be very interested in buying at this very price of 500. So if there is a lot influx in buy pressure, what do you think is going to happen? Market on this very iPhone 15 is going to push up a little bit, and if more buyers comes in, it's going to then push up a little bit. If more buyers come in, it's going to then push up a little bit, even above the previous price of $1,000 for one iPhone 15, for example. So that is the psychology behind buyers, okay, when this happen in the market. So what all buyers look for is a market that have gone all the way to the downside. Let's say, for example, you're looking at a particular asset. Let's say in this case, I am looking at usdjpy, and the price have come all the way to the downside because every one of us in any situation will always want to buy at a lower prices. And if price have dropped all the way to the downside, I am looking at a level that I feel from this very point, market is going to begin to move upward. And that psychological level is very important to all of us when we are trading. So this is very, very important. The same thing happens when it comes to resistance. So in similar case, for example, iPhone 15, if the price have already moved from $500 up to $1,000, then moving to $1,200, people that bought at $500 will want to collect profit. So as a result of them collecting profit, market will begin to have a decline, okay? And if you see that market is declining, and if you bought at $500, even though you don't have the intention of selling, you will be push to sell the market because you believe that what you are seeing right now, since you bought from all the way $500, a market have moved to 1,000 and 1,200, you will want to collect profit off the market. That will make the market to begin to move all the way to the downside. This is what creates resistance in the market. So you can simply put, what creates resistance in the market is a result of sell pressure. When markets sell off, move back up a little bit, sell off, move back up a little bit, sell off, that is what creates resistance. And what creates support is when buyers push the market a little bit and then market come back down, they push again, market come back down, push again, market come back down, then push again all the way to the upside. This is what creates support in the market. So this is a very important psychological standpoint that you must have to understand. So anytime you want to buy an asset or anything you want to sell an asset, look at this psychology and look at what people want to do. If the price of a particular forex pair has moved all the way to the downside, and if the price of that very pair have moved all the way up from your chart, then you can, from this very analogy, know whether the market is going to come back down or the market is going to move all the way to the upside in case of psychological support and resistance. And this is very important because if you think this way, it will help your trading and how you trade support and resistance greatly. And this is very important. Another important thing about support and resistance that I want you to know and take advantage of is continuation resistance and counter trend resistance, and also continuation support and counter trend support. These two concepts are very important for you understanding and trading support and resistance very well. If you look at most time when price is moving, price will move in this very formation. It will move upward, retracement, move upward, retracement, move upward, retracement, move upward, and then retrace. In this very case, this is a continuation trend. Okay, market is moving upward in the continuation formation. That means this is a continuation support. All the support right here are continuation support all the way to the upside. We also have continuation resistance. If market is moving downward and market is making progressive move, we have continuation resistance right here in a downtrend. But one thing very important that we also need to take advantage of is if market is moving upward, okay, and retracement, market move upward, sometimes we can see a move like this, okay, move in a move. That is market moving impulse retracement in a single move before it will then move all the way to the upside. One thing you need to pay attention to in this kind of formation is that in as much as the market did not come back down to this very level, it is still in an uptrend. There is no doubt about it. Market is still going to move upward because if you look at it, market moved from this very point to this very area, impulsive move, retracement. So this retracement is having impulse retracement in between it. So you don't count this as market reversing. This is still in an uptrend in as much as the market did not come all the way to the downside to this very point of important support. So market is still going to move all the way to the upside. And this also happened in the case of resistance as well. Let's say, for example, market was coming back all the way to the downside on resistance formation, retracement, market move impulse, and then we have this very formation. Market is moving up and down, moving up and down. In as much as the market did not come all the way to this very point, then it means that market have capability of coming back down. And we consider the whole of this very move right here as a retracement and not the market reversing, because this is very, very important. Once you look at support and resistance this way, it will help you. So the next impulse, we want to see the next impulse cut below this very level of support and create a new low, just like we've been seeing right here and previously on your chart. So don't consider this kind of formation as reversal on your chart in as much as the market did not move all the way to this very point where the market moved from as impulse in the past. So this is one key thing you must have to understand and put it in your resistance trading strategy that is going to help you greatly. This is very important. The last thing I want to talk about is in a counter trend formation. Let's say, for example, you are in a position, market is moving upward, or you see a chart, market move upward, and then market is coming back all the way to the downside. Market can come to a major psychological level and have a counter move all the way to the upside. This very support level is now a counter support zone. Market move upward. Remember, market has been moving all the way from here upward. Okay, market has been moving upward, and then market come back down a little bit, move down, break structure, move down, come back down, break another structure. So market can break like two structures, okay, and finally come to a major psychological standpoint and begin to move all the way to the upside for continuation, although it was a counter support, because this is very important, not a reversal. Market can come all the way to the downside and then continue that very long trend. This is what you need to understand in trading support and resistance that can really help change the way you look at the market. The last thing here is on resistance formation. The same thing can happen on resistance, where the market have been moving all the way to the downside, okay, creating resistance, lower lows, and all of a sudden market begin to move upward, break structure, and come to a certain resistance level and begin to move all the way to the downside. You can see that the market has broken this structure first of all, break this other structure, and come to this very major counter resistance level and begin to turn again and move in the direction of the overall trend. This kind of formation happen on the chart a lot of the time, and people get confused when they see this kind of formation. Market is still going to come back down. What you need to do is to understand the concept of key support resistance, how resistance support works, and psychological levels. Once you understand this concept, it's going to help you trade very well when you see this kind of formation in the market. And this is very, very important. If you look at this very price chart right here, usdjpy, if you notice, market is moving upward from this very point, and then we see the movement upward, market move again upward, retracement, and then market move all the way to the upside. If you look at this very price chart, you see that the market move all the way from this very area, okay, move all the way to this very point of important resistance, and now market come back all the way to the downside. If you notice, this movement was very aggressive, and this has formed a trend already. So this very trend formation, okay, right at this very point, come to a significant major counter support level before this move continue. Because if you look at the overall trend, you discover that from this very point, this trend is still in a major uptrend all the way to the upside. Market come to a major psychological support before it begin to move all the way to the upside again. And this is what you must have to pay attention to. Not all the time you see market moving all the way drastically downward mean that market is going to have a turn and begin to move all the way down. It can be that market is going to look for a major counter support or a major counter resistance before it will continue that move all the way to the upside, just like we can see in this very case. For you, if you don't understand this concept, you will think that since the market move all the way from this very point of important support all the way to this very point, for it to retrace this much, it means that market is reversing. It's not a reversal. Market is only looking for a counter support, which this support is very, very important, where market finds support right here and then begin to move upward. This is very important. That is why you need to pay attention to this kind of support and resistance in the market. Another example here is this very area where you see the market was moving upward. Look at it. Market was moving upward at this very point. But as market was moving upward, we see market retracing. Look at it here. Market move all the way from this very area. We see market move down, retracement, move down, retracement, move down, retracement, move down. But market did not come to this very level of support, okay? Because this support was the support we see before the market move all the way to the upside. That is why if market is moving upward in this very direction, market move from here upward, retracement, if the market did not come back down to the same level, then it means that this is still a retracement, okay? The market move upward again. If market did not come back all the way to this very point, then it means that it is also a retracement. So what we need to look out for is market moving upward and should not come down to this very point. Market should just retrace before continuation. If market come back down to the same point, then that means this market have capacity of reversing. In as much as we don't see the market come all the way to the downside, it means that markets still have capacity of moving all the way to the upside. And then if you look at this very price chart, market move from here, from this very point right at this very support, all the way to the upside, and then retrace again, and then continuation to the upside. This is what you must have to pay attention to and apply when you are trading resistance and support. Concerning where the market is right now, I still believe that market have capacity of moving downward for a retracement. I talked about this in my immediate last video, that market should retrace within this very area coming downward, and we need to also pay attention to this very level of important resistance right here, because this is a major psychological level. So within this area, market should retrace, or market can come into this very area and then find retracement. However, if you are in a buy position, consider taking profit at this very point, because retracement is going to come into the market before the next move upward. And this is very, very important to all of us. So if you understand this very concept of psychological levels in the market, and if you also understand the concept of trend continuation, support, resistance, and also counter resistance and support, it will help better your trading decision and know the levels that are important and the levels that are not important in the market. This is a very key concept to trade resistance and support very well on your chart. Consider supporting this channel by leaving a like for this video, subscribe right now, and turn the bell notification for more forex videos like this one. Also check the channel for other forex content. And if you want to watch my Fibonacci trading course, a full course on Fibonacci retracement and extension, know how to properly draw it and take advantage of the Fibonacci tool in your trading strategy, check this video right here. It's going to help you a lot. And if you want to learn how to trade divergence trading strategy the proper way, check this video out. It's going to help you too. Thanks for supporting this channel.